Hi everyone, this is an overview of the state refund piece of the Ken taxpayer fact pattern in homework problems numbers 7 and 8 from chapter 5 homework. The state refund. Now, this is legitimately a complicated concept, so I wanted to do a separate video tutorial kind of explaining what's going on here. Now, part of there's two things that make this kind of a more difficult fact pattern to follow than some of the other facts that were given. Like the gambling income. Gambling income is pretty straightforward. It's income, happens to be illegal, gambling related, but it's still income. That's fairly straightforward. Here what we have going on is we have a state income tax that we dealt with in 2019. The state income tax has interplay on the federal return from 2019, okay? And the state income tax reconciliation is now coming back to factor into the 2020 return. So we have like a timeline complexity here, but then also two tax returns that we're thinking about here. And that's important to note. I want to make it very clear. Your homework problem number 7 and 8 deal with Ken's federal income tax. But Ken also has to pay income tax to his state, meaning if he lived in New Jersey, he'd be paying income tax to the federal government, but also to his state government, to the state of New Jersey. So in 2019, and here's what happened. Let's just go over what happened in 2019 first. In 2019, Ken paid, he had this amount as withholding on his state for state income tax purposes, okay? So this was reported, and so he therefore used it as part of his itemized deductions in 2019 on his federal return. So this is state tax, this is federal that we're talking about up here. So he uses this $3,600 as part of itemized deductions in 2019, okay? And that $12,250 itemized deduction, which includes this amount, was a benefit to him in 2019. But then here's what happens. He reconciled the state piece of his tax return, and he sent his state return into the state authorities. They accepted his reconciliation, and he actually did not owe $3,600. He actually only owed $29.90, okay? And this is because he went through the same reconciliation on a state return that we are learning how to do on the federal return. And ultimately, here's what happened. He only actually owed the state $2,990 in 2019. So remember, this is, or just to point out, this is 2019. So what the state does is they gave him a $610 refund that he received in 2020. Okay? So this $3,600 deduction that he used in 2019 was actually based on an overpayment to the state, and the state reconciled it in 2020. So what we're doing as part of problem number 7 is we are reconciling the fact that he received a benefit based on the $3,600 in 2019, but that benefit was really should have actually been lower. We're seeing that benefit being lower reflected in the $600 refund that he's getting from the state in 2020, and that's why we have to work through this process here. Okay, and this process deals with the fact that he took itemized deductions, but he could have also taken the standard deduction. So let's walk through this worksheet here. This worksheet is also in your Excel file that I shared on Blackboard, okay, the little state computation. Okay, in 2019, he realized an itemized deduction of $12,250 with the $610 overpayment included. So this is the benefit in 2019 that he got. If he didn't use itemized deductions, he would have been using the standard deduction. Now, what if we removed the $610 from that $3,600 that he used? He would have actually only had $11,640, okay? So another way of thinking about that is, if he had used the true state tax number that he truly owed, then he wouldn't have had $12,250 in itemized deductions. He would have had only $11,640, which means he would have chosen in 2019 the standard deduction of $12,200, okay? Because it wouldn't have made sense for him to choose $11,640. He would have just chosen the standard instead. So what we find is that he has to account for that disconnect, and the difference between the amount that he would have taken if the $610 had been removed from this $3,600. So if he had taken the difference between $11,640 and $12,200 would be $50, and the $50 is what he must include in his income in 2020. So this $610 refund is going to have a $50 tax impact on Ken in 2020. Okay? I want to reiterate that this is difficult. This concept is difficult because, in part, we have not yet gotten to itemized deductions. Okay? So each chapter, you're on the textbook and me, we are throwing some facts that you haven't yet quite learned, or that you're getting introduced to, and we will go through them in more detail as the course progresses. This idea of a state, state and local taxes being a deduction on your federal return is one of those things that we're going to go over in the coming chapters. Okay, chapter 6 and 7. So what I want you to do, I gave you the $50 answer, but I did want you to kind of understand why and how we got to the $50. And big picture, if you're finding this a little hard to follow, big picture is Ken pays taxes to both state and federal. The state taxes are potentially an itemized deduction on his federal return. And from a tax perspective, there are certain situations where prior year activity can ripple into follow-on years. Okay? Big picture, just know that this is where some of the complexity comes from. And the worksheet that I provided is a tool that you would have in your workplace if you were asked to do this, okay? You will be given a tool to help work you through the math, and you would have time to understand this and learn it through practice, okay? I hope this is a helpful tutorial, an overview of the state refund concept. Please keep in touch with questions if you have them, and I'll see you in class on Monday. Thank you.